Good morning, Renegades. Today we are going to talk about filing your federal income tax return. 'Tis the season. Back when I first started teaching in my very first financial fitness class, I asked all of my students what they were most afraid of after high school. Like, what was their number one fear of adulting? And a common answer that I got back was filing a federal income tax return. I probably had 5 students out of 20 that were worried about that. 4 of the 5 already had a job, so they were going to have to fill out an income tax return. And the other one just thought that it was super complicated. So I decided that we would do a unit on how to file your income tax return. And we're distance learning, so you get me as a video. There's a lot to say here. It would be easier to do in class. I will try to do this justice. I'm going to give you a lot of information. Just know that these are just ideas and concepts that I want in your brain. They aren't things that you have to memorize, because we have reached a point in doing income tax returns where basically everything is automated. So there's going to be a program. You've probably heard of TurboTax. But there's H&R Block has their own program. IRS.gov has a program. And it's basically software that guides you through the process of filing your income tax return. So it's very streamlined. It's very easy. Back when I first started having to do my own taxes, there was a big, thick magazine type pamphlet that you would get at the post office. And most of that was tax tables that you had to look up your tax, your income amount, and then calculate your own tax based on a table. I might show you what those look like on the internet, but really they're kind of irrelevant nowadays because those tax tables are in the software. You don't even see them. They're totally behind the scenes. So that's what we're going to do today with this video. So you might be asking yourself, what makes me qualified to even talk to you guys about doing income tax returns? Great question. I have been doing my own taxes for about 20 years. I have done taxes for myself and my wife. I did taxes with myself and my ex-wife. I've done taxes for my mom. I've done taxes for both of my sons. So I have filed dozens and dozens and dozens of income tax returns for my family. Currently, the last couple of years, I've been filing for my youngest son. He is single. That is his status. My mom, she is retired and is widowed. So she has a completely different status than my son. And then Carrie and I, we are married. We combine our income into one. So we file what's called married filing jointly, meaning together. So I have a lot of experience doing this. My very first memory was back when I was still living at home. I believe I was 18, and my stepdad made me sit down at the dining room table and fill out my own income tax return. And it was a simple form. It's 1040 EZ. They got rid of that a couple of years ago, but it was just one page and very straightforward. So if you were worried about it, hopefully all of that made you a little less worried about it. I'm not like some brilliant math guy. I'm just an average guy, and I've been able to do my taxes for 20 years. So a couple of things before we take a look at the presentation that I've put together for you guys. The number one thing that you do have to remember, you have to lock this in because it'll be true for the rest of your life unless Congress changes it, is that the deadline for filing your income tax return is April 15th. Every year, April 15th. If that falls on a Sunday, sometimes they'll push it back to the Monday, but April 15th is your tax deadline for filing your federal income tax return. And I believe legally, if you're mailing a check to the Internal Revenue Service, the IRS, it would have to be dated or time-stamped April 15th. So that's the deadline. Lock it in there. Rest of your life, April 15th, income tax returns. The reason why you don't really have to remember anything else is because it's just going to get more and more streamlined with the software. And as long as you have the software, it will guide you through what information to put in. Like I said, we'll take a look at that in a minute. So, a few terms that I might use that I want you to know what they are. The first one is a W-4. A W-4 is a form that is required by your employer to have you filled out. So, when I started at Wafer Tech, I had to fill one out. When I started with the Camas School District, I had to fill one out. And what this does is this tells the employer how much money to take out for your federal income taxes. And there's a few different components that go into that, but that's basically what a W-4 is. It tells the employer how much to take out of your paycheck for your federal income taxes. So that is different than a W-2. A W-2 is, you'll probably hear your parents talking about W-2s. Right now is the season when those start coming out. And what that is a summary of every penny that you made from January 1st to December 31st of last year. So the W-2 is just a summary of everything that you earned and everything that you paid in federal income tax, Social Security tax, Medicare. So all of the deductions, every penny is accounted for. So that is a W-2. Very important. You need a W-2 in order to file your income tax return. So 3 more terms. One is a dependent. You might hear your folks talking about this. You are probably a dependent for your folks, which gives them a tax break. A dependent is someone who lives in your household for over half the year, and you take care of them. So you pay for their housing, you pay for their food, not necessarily all of it. And the biggest component of that is you provided the housing for over half the year. So for example, let's say you have 2 parents, they're divorced, 1 kid, and that kid lives for 7 months in mom's house and 5 months in dad's house. Mom gets to take the dependent credit because it was for over half the year, unless it's stated otherwise in their paperwork. So that is a dependent. A dependent is someone that you pay for generally housing, and the most common example of that is kids. So when both of my kids were living at home, I had 2 dependents. Deduction. A deduction is something that you can take off of your total income to lower your taxable income. Some examples of deductions would be property taxes. So I deduct my property taxes. If you make a lot of charitable donations to Goodwill Salvation Army, you can deduct those. There's another one, and I'm drawing a blank right now. I think it's in my presentation. But a deduction is something that lowers your taxable income, so that is good. The most common deduction is what's called the standard deduction, and everybody gets that. So if you're single, if you're filing your taxes this year, you will have a standard deduction. And last year it was $12,000 for a single person and $24,000 for a married couple. Basically what that says is if you made, let's say you only made $12,000 and you're single, you get the $12,000 standard deduction. So you subtract $12,000 from your $12,000. And according to the federal government, you have to pay taxes on $0. So you won't owe anything. So what's nice about this for you guys is that if you make less than the standard deduction in any year, you will pay no federal tax. You will get it all back. So just something to file away. Standard deduction. And then the last term I have for you is credit. Credit is something that the federal government pays you money based on a certain situation that you are currently in. I have 2 examples of this. This happened to my oldest son. He had moved out. I don't remember if he was married yet or not, but they had a kid together. So he got what was called an earned income credit. This was $3,000 cash to him for the fact that he made such little money, but he was the head of his household. So he was living independently and didn't make enough money. Basically, he's poverty level. So because of his situation, he qualified for earned income credit, which basically says that you're not making enough money to live and pay all your expenses. And then the other one he had, because he had a kid, was the child tax credit. And this was another $3,000 that he got just because of his situation with having a son at the time. And I believe the key was that they were unmarried. I don't remember because his wife didn't have any income. She didn't have a job. So she was staying home taking care of the baby. So she wasn't part of his tax filing. So I don't really remember exactly how all this stuff that I put in. That was several years ago. So he got an income tax return of $6,000. He only paid in maybe $1,000. So because of credits, he was paid money back because of his situations. Okay, so I think we are ready to start with the presentation. I'm going to switch over to that now. Just remember, April 15th, lock it in for the rest of your life. That's when your federal income tax return is due. Not return, federal income taxes are due. You have to file. And then I threw some terms at you. So that lays the stage for our presentation, and I'm going to get that started right now.